session of business plan. So excited to be back with you after a long break. We haven't seen each other in a while, and I hope you've been getting stuck in with your business plan, and that you have a clear idea what your business that you want to focus on, and that you want to start writing your business plan on. And I'm hoping that by this time, questions of defining your business have been answered. What your business is going to look like, those questions have been answered. The questions of what idea and the basis for your business is going to look like, who you're going to have in your team, and what your team is going to look like. By this time, you should have all of those things defined and well defined. And what I want to focus on today, and one of you have asked me to look at financial analysis, specifically on what a break-even analysis looks like. So my understanding and my assumption is that you have some kind of a basic understanding of accounting, all right? And that you have some kind of a basic understanding of income statements. You have a basic understanding of things like balance sheet, etc., etc. So when I speak of cash flow, you understand what I'm talking about. If you don't have that, then we have a bit of a problem, because you're not going to be able to do a proper financial analysis if you don't have that kind of a basic understanding. So my understanding is that everybody in the class has done some kind of a basic accounting course, which we do offer in this program, and so some kind of accounting is not going to be a problem. All right. So if that's not a plausible assumption on my part, then you're going to have to help me build that understanding, and then so that I can be able to help you navigate the next section of what you have to do for your business plan. All right. So if there's any other thing that you are struggling with, that you cannot understand, it's now or never. All right. You have to submit by the end of October. You have to submit this work by the end of October. And if you have not done so by the end of October, then we don't have any basis for giving you any marks for this course, and it counts 12 credits. So it's very important that we're all on the same page when it comes to this. All right. Are there any questions that you would like me to attend to in this tutorial before I carry on? If you have anything, just post it under the Q&A or post it under the chat. All right. So if you have any questions that you would like me to deal or tackle in this session, then let me have them now. Otherwise, I assume that you guys are fine. Okay, so I'm gonna ramble a little bit on basic financial concepts. All right. So this might not be everything for you, but I think it's worth looking at. All right, so we're going to look at some basic financial statements, and that's my aim. So we're going to look at income, expenses, assets, equity, liabilities, how to prepare an income statement, because everybody is going to have to do that. And then we're going to look at some financial ratios. And that's my basic reason for doing this. And what a basic financial analysis looks like, which I'm expecting from you as part of your business plan. All right, so let's get into this. So accounting involves bookkeeping and reporting, and how a transaction happens from a transaction to a financial statement. That's all part of an accounting cycle. All right, so we basically want to see, when we see something on the financial statement, where did it come from, what kind of a decision was made, and how did it find itself on there. So that's part of what you do in your accounting. So a business that you are starting is going to be some form of an entity, whether it's a Pty limited, it's an NPO, but it is some kind of an entity that you are starting, and this is what you're basing your business plan on. So your business plan doesn't have to be a corporation, can be a non-profit center, but we need to be able to see how this business conducts itself financially. Okay, so each business at the end of a period produces what you call financial statements. All your financial decisions in the business are shown in financial statements. And financial statements include cash flows, income statements, and a balance sheet. Okay, so it shows the position of the firm on at a particular period. All right, so it will say on the 31st of March as the last day of the financial period, this is what the cash flow of the business look like. This is what the balance sheet of the business looks like, and this is what the income and costs in the business look like. You guys happy with that concept? Okay, if you are unhappy or unclear about it, please let me know before I go too far. Okay, so these are basics. All right, these are basics, financial statements. Okay, all right, so income shows increases in economic benefits, so it shows all the money that's coming to a business during a certain period. Okay, so it's in forms of increase or inflows of assets, otherwise a decrease in liabilities, which leads to an increase in equity. So we know this is more the balance sheet. So the balance sheet speaks of what we owe and what we have, and the net asset value of the business. So the balance sheet is supposed to say the business owes so much and the business has these assets. So in the balance sheet we talk of income, I beg your pardon, of assets and liabilities. All right, so it's part of concepts that we talk about. And then in the income statement, we're talking of costs and expenses. Okay, so that's expenses. It's something that we see happening in the income statement. All right, and then assets includes resources. It includes things that the business own, all right, and control as a result of past events. So either someone donated something to us, or someone, or we bought an asset. All right. So an asset is anything that produces an income or assists in the bringing of income. A liability is anything that we have that saps money out of us. It doesn't bring money to us, but we have to pay. So if we're paying rent, that's a liability. So if we are paying somebody else for something that they do for us in the course of business, that's part of liabilities, if we owe them. All right. Equity, so it's the remaining interest in assets after liabilities have been deducted from assets. So that part of what the business, so if you take the assets in the business, physical assets and even intangible assets, and you take away liabilities, what you have left is equity, and it's usually attributed to the owners of the business, and we usually call it the owner's interest. Okay, so I've spoken about what liabilities are. Okay, and then we have this thing called the duality concepts. I'm not going to dwell on this. So who uses the financial information that we gather? All right, so anybody who's interested and wants to find out what's going on with the business. It includes investors, includes creditors, clients, employees. It can be government. Why does government want to know what's going on in your business? Because you pay tax. All right. So any stakeholder in your business might be interested in what's going on. And then internally, as managers, as people who are in this business, we need to know what's going on. So in your business plan, as you prepare your business plan, you want to do this because you want to show potential investors what this business can do. You want to show potential people that you want to be involved in your business that it is worthwhile for them to get involved. And that's why you're preparing financial statements, basically. And then from an internal point of view, you yourself want to be satisfied that your business is in a sound financial standing. All right. And then anyone who's coming to join your business want to be satisfied that they are coming into a profit center, a business that's able to make money. Okay, before I get into financial ratios, okay, now I don't have a pen where I can let me just see if I can write something here. Okay, I can't write. I was hoping that I could show you somehow. Okay, let's see. Let's see. Okay, guys. All right. Show you somehow. Sorry. This is completely now. Okay, I messed up there. Did something. Don't know what happened. All right, sorry about that. Sorry about that. Okay. So basically what I wanted to do was to say in an income statement, your first top line is income. All right. So let me get out of here. All right. So your first top line is income, right? And then you have cost of sales. All right. And then at the bottom of that, you have expenses, all right, or costs. Now, and then we know that profit is a difference between income minus expenses, right? Do you agree with me? Okay, let me just see if I can be able to show you something here. Because okay, all right, let me see. Grappling with these things here. Tell you guys. Okay. So what we want to do, let me just increase this to 18 so that you can see properly. So if this was your income statement, in your income statement, your first line would be revenue or income, all right? So let's say your business in year 1 was able to, let's say you sell widgets. So the quantity of widgets that you sold was 1 million widgets, right? Let's make that look like that. Okay, so you were selling let's make that 1 million. Sorry guys, just bear with me here, stay with me, don't go away. Okay, so there are your 1 million widgets and you were selling them for R1. Okay, you were selling them for R1. So the income therefore is that times that. All right, so there's your income. But then you have something under that that's called cost of sales. All right. How much did it cost us to produce the widgets? So under cost of sales, you might have the direct hours that people worked, and it cost you 30,000. Your electricity cost you 5,000. Your hired machines were 15,000. All right. So the total cost of sales, is that in bold, will be sum of all of those. Make that in bold. All right. And then you are going to have something we call gross profits. Okay. So the gross profits therefore are that take away cost of sales. All right. So 950,000. Make that in bold. And then you have expenses. All right. So you have rent. You paid marketing for your widgets. You have salaries. You have an accountant, a bookkeeper. You have printing expenses. You have a telephone that's ringing every day. You have your internet. There's your expenses. What else do you have? What else do you have? You have, what else do you have? What have? Okay, that's it. You have, those are your expenses in your business. So you paid 12,000 rent. You paid that expensive marketing campaign, which cost you 9 grand. You paid your salaries, which was say 150,000. Hiring very expensive people. You paid the accountant 20,000. The printers you paid 10,000. Your telephone cost is 25. You paid 25. Say 25,000. You paid MWeb another 10,000. All right. So your total expenses end up being the sum of all of that. Right. There's your business shaping up. Ask me questions as I go along. And then, so those are expenses. And then you have your profits before interest and tax. Okay. So your profits before interest and tax is that minus this. What happened now? Okay, I made a mistake somewhere. Blah 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 blah. How do I sort this out now? Where is this thing? Okay. Ooh, I haven't used these things in a long time. Okay, it's fine. Let's leave that. This is equal to that minus that. Okay, this is equal to that minus that. There we go. There's your gross profit. Now all of a sudden you have interest on your loan that you borrowed from the bank. I'm simplifying here. I'm simplifying very much. So you're paying 250,000 interest on the loan that you took, and the tax man came to you and said you had to pay 27%. The 27% tax these days of that minus that. Simplifying, remember I'm simplifying. Net profit, I'm simplifying, people. This is simple. I know some of you will have problems with what I'm doing, but I'm just simplifying. Minus that minus that. Okay, there we go. All right, so you want to come up with a break-even analysis, right? Break-even analysis. What is the break-even analysis? The break-even analysis says, how long will it take? All right, so you can do break-even in terms of time. You can do it in terms of quantities. Okay, so sorry, we have a loan of say 20 million. There's our loan, and we are saying, how long will it take us to make profit? Okay, how long do we take before we break even? So how long do we take before we can actually make money that is our own? That's part of, that could be your break even. Break even analysis can also mean, how much do we need to sell? How many widgets do we need to sell before we start making profits? Okay, so break even can be based on the loan. All right, so we're saying we're not making any money until this loan is paid. Or it can be based on expenses. All right, so what are our expenses here? So you can say, well, our expenses here, our real expenses, because the break even comes when you say, when do we start putting money on our shareholders? Okay, when do we start putting money in the pockets of our shareholders? And that's what gives you a break-even analysis. All right. So on year 2, this is now year 2, and year 3, and year 4, and year 5. Right, so we do the same here, and then we discover that in year 2 we made say 400,000. All right, and in year 4 we made 420,000. In year 4 we made 450,000. I'm simplifying, people, don't shoot me. Just trying to show you. And then in year 5 we made 501,000. All right. So you as a business want to know, all right, so we've made those sales throughout that time, and we made that profit over there, right? But we still had to pay the loan, and we had to, so you can say, in terms of break even, how long does our profits start to pay and put money in our shareholders' pockets? All right. How do you find that question? How do you then begin to say, okay, it's going to take us so long to say, okay, our business is now break even. We are now starting to, we've paid all the expenses that we have, and now we can, so you can pay, if you didn't have a loan, then you could say, okay, this loan is a big, let's make it 5 million. 5 million, right? And then you can say, all right, based on all these monies that we've paid, we're saying all of our profits is going towards paying for the loan. All right, so we take all of our profits and we see when in this timeline do we reach 5 million rand that has been paid. At what point? So we're saying our shareholders have made a decision, or we're making a decision right now that we're going to pay off the loan before we put any money in our shareholders. So how long does it take in terms of time to pay off the loan? So at this point, all of these monies make up a sum of 2.1 million. Okay, so it's probably going to take another 5 years before we pay off 5 million rand. Okay, so at what point, at which year does all of our profit sum up to 5 million? So that gives us our break even. If we didn't have a loan, all right, if we didn't have a loan, we will look at the number of quantities or the number of widgets that it will take to sell before we made a profit. Okay, so how many widgets does it take for us? So let's say we only sold 100,000, not a million, but 100,000. All right, so you can see that our income, our profit is negative. All right, so we will say, how many widgets does it take? How many widgets does it take before this business can make a profit, can make a positive profit that we can now take and give to our shareholders? Can you see the difference in terms of break-even analysis in time and break-even analysis in quantities? Again, I'm simplifying here. I don't know what your business looks like that could give you a better analysis. So you can send me your workings if you want, and I can have a look, and I can tell you, no, your break-even analysis is completely out, or but that's how you look at break-even analysis. How long does it take for us to make money and pay off our loan, or how many widgets does it take? How many widgets do we have to sell for us to start making a profit? All right. So we will say, well, in this case, because these expenses are not going to change and the cost of sale is not going to change, so now we're saying, okay, maybe, so we say 200,000 widgets. We're still not making it. Say 250,000 widgets, 250,000, not 2.5 million. We're almost there. So 261,000. We're still not making it. 275,000. We're almost making it. Can you see how I'm getting my profit? There we go. So 290,000 widgets sold. We're now breaking into positive territory. All right, but we still have interest that we have to pay. So you can have a look at this and say, okay, maybe 600,000 widgets gets us to start paying the interest. All right, So that's your break-even analysis. So you can say, well, we need to sell 600,000 widgets before we can start paying the interest, because even if we make 10,000 rand profit, we still haven't paid back the interest on the loan. Remember, the interest only covers the interest, doesn't cover the capital. So you still have to pay the capital, but the interest is covered by 250,000. How? So now that's part of your break-even analysis. Remember, if you're not making any profit, you're not paying any taxes. So there's your number that pays both taxes and profit. So again, it's just a simple way for me. I have been able to find a break-even point. So that tells us that when we have sold a certain number of widgets, we get to a point where we are positive on our profits, we've paid our interest, and we've paid that. And that gives us a break. So a break-even analysis then says, when we have made 600,000 widgets, we begin to cover our interest and cover our debts. So your break-even analysis is to give your investors an opportunity to say, when the business reaches this stage, you will start getting money. All right. So already this widget business of ours is on very shaky ground, because it's barely covering the interest on the loan. All right. So the bank would be happy at this point, but your investors will not be happy, because the investors are interested in the net profit line, where they start, because this money, they start to share in that. So your creditors are happy here, because you're paying your accountant, you're paying your salaries, your employees are happy, you're paying us, you can afford to pay us. Your suppliers are happy because you're paying them. The bank is happy, or they're happy because you're covering the loan. But then your investors, whom at the end of the day, means they are the guys who are supporting the business. When is it that they can say we are now making money? All right, and that's break-even analysis. At what point do investors say we are now making money? You need to be able to come up with that point where investors are able to put money in their pockets. All right. So if in this case covering a 5 million loan only happens at year 10, an investor needs to know that I'm only putting money in my pocket in year 10. That also is a point of decision. It's a decision that shareholders have to make, or investors have to make. Investors have to make a decision on, do I put my money in a business that only covers its loan in year 10, or do I put my money in a business that will only start putting money in my pocket when they've sold 1 million widgets? Can they sell me? Well, how long will it take to sell 1 million widgets? And that's the decision that investors want to be able to look at, and then be able to say, yes, I am going to invest in this particular business. And that, ladies and gentlemen, is a very, 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 very simplified way of looking at the break-even analysis. If you have any questions, send me an email, and then we can have a look. Send me your workings, send me your financial analysis that you've done up to so far, and then we'll be able to start looking at how we can help you shape your financial analysis so that it's ready for a business plan. Remember, a business plan that has a poor financial analysis is not a business plan. Okay, it doesn't help anyone, because we want to know that your business is viable, that your business is profitable. If we can't make that decision based on the finances that you've given us, then we cannot make an investment in your business. That's the point of a business plan. The point of a business plan exercise is to say, is this business viable? Is this business going to work? Is it going to make money? Should I invest in it? Okay, so if your business plan does not answer that, then I don't know what, it's not a business plan. Okay, so that's why I have given 35% of your marks on financial analysis. 35% of your marks in this business plan is on financial analysis. So please spend some time. And I said I want a 5-year focus. So you need to fill up all of these. Remember, let me just see. Okay, remember, your year 1 in your financial analysis must be in months, and then year 2, year 3, year 4, year 5 can be in years. Okay, very important. Okay, year 1 must be broken up in months. So I must see an analysis that's broken down. First year must be broken down into months, and then year 2, year 3, year 4, year 5 can be in years. Okay, so please remember that when you're doing your analysis. All right, if you have any questions, guys, ask me now, or send me an email, or send me an inbox on Funda, and then we can see how we can help you. I hope that was helpful.
Yeah, I got a question. Should we include calculations in the business plan, or should we just structure just a certain amount of money or some prices without considering calculations?
Okay, you are not audible. Do you mind typing that? I can't hear you properly. Okay, is it necessary to include this plan? Now, okay, that's a very good question. Yes, it needs to be included, but it's an appendix. So appendices must show calculations. All right. So in the body of the plan, now you only have a summary, but in the hello.
Hi, I can hear you.
Okay, but in the business plan, so as part of the business plan, at the back, you will show your calculation. Okay.
Yeah. Yes.
All right. So, okay. Thanks, guys. I think let's stop it here at the moment, and then it gives me time to prepare my next module tutorial. If you have any more questions, do you mind just sending them to me later? Is that okay? All right. Thank you so much. We will meet again. So send me questions, send me your workings, and I will be able to engage with you properly on this. This is a big project, guys. Don't leave it till it's late. Do not leave it till the last day, because you're going to struggle. There is no way you're going to produce a business plan in a week or in 2 days. It's not going to work. So it's better that you do. That's why we've given you the whole semester to do this. So don't leave it till it's too late. It will not work. All right. Thank you.